Well, hello there. Are you looking to improve your finances in 2020? Well, if your finances are area of focus and you've made some New Year's resolutions to improve them, then stay tuned because I am going to share some great tools and techniques that can help you reach your goals a little bit faster. Hi, I'm Nathan Garcia. I'm a certified financial planner and retirement planning specialist, and I do these videos to help educate you about the things that you're not going to hear on CNBC. You're not going to hear from some of these retirement seminars or other YouTube videos. Instead, I want to give you practical advice to help you get into retirement with confidence and direction so that you can enjoy your retirement and live a fulfilling life. So, if you've made some resolutions for New Year's, you might be getting a little tired. You might be feeling a little worn down now that we're in about a week into the new year. But I wanted to share with you a few different tactics so that you can keep some momentum and get the results that you want. So in this video, what we'll do is cover 3 areas that you can focus on to improve your financial plan. And these are areas where you should be updating them at least on an annual basis anyways. So I think that you'll find a lot of value in it. Of course, everything that I say here is just for informational purposes only, and it's not for any financial advice for you. So let's get into it. So the first thing that you need to do to update your financial plan in the new year and to improve your finances is to review your effective tax rate. Now, what is your effective tax rate? Well, it is the amount of money that you spend on taxes relative to your overall income. So for every dollar that you earn, your effective tax rate is going to tell you how much money actually went to taxes. So it can be really helpful, sometimes sobering, sometimes saddening, to look at your effective tax rate. But when you consider that most people are going to spend 30 to 40% of their income in taxes, then you want to figure out, is there a way that you can improve your taxes and potentially reduce that? So the easiest thing that you can do is get a copy of your final pay stub from 2019 and look at the total amount of taxes paid for your state, for your federal withholdings, and then I like to include Medicare and Social Security and any other taxes that are there. But effectively, what I want to know is, out of every dollar that I earned, how much money went to the government? And if you look at that number, you're going to total that number, and then you're going to divide it by your gross annual income. So if you find out that $30,000 went to taxes and you made $100,000 last year, then you would have an effective tax rate of 30%. So that is motivation for you to say, is there a way to reduce my taxes? Okay. Now, an easy way that you may be able to save some money on your taxes could be contributing to a 401k that is going to allow you to get some tax deferral. That could be a beneficial way for you. And what you may find is that by just increasing your contribution next year, your effective tax rate could go down. You might also use a tool like a health savings account, an HSA, if you're not already using one. And that again is going to let you put some money into that account on a tax deferred basis, meaning that I'm going to postpone taxes into the future, but it allows you to get a tax break today. And that's really helpful for you if you are looking to save some money in taxes or you want to keep a little bit more of your income. Those can be great tools for you. The other reason that you might want to review that effective tax rate is if you're getting a big tax return or you're expecting a big tax return coming up, then you should probably update your withholdings or talk to a professional to give you some guidance on updating your withholdings, simply because you don't want to be giving the government money and letting them use it all year when instead it could be used for you to pay down debt or just to do the things that you like doing. So the first thing that you want to do to update your financial plan in the new year is to look at your effective tax rate. So guys, I'm doing a training on a new set of laws that went into effect last month that changed how you should be planning for your retirement. And I am doing that presentation live on Thursday evening. You can register for it. It's an educational training. It's completely free. And in order to save your seat, you'll have to go to GarciaSecureAct.com. And that is going to allow you to register for the training. And then also you're going to be able to submit some questions if you'd like those answered. But if you're not sure of what the Secure Act is, then you probably want to be on that training because there's a lot of good information that we'll cover. All right, so let's get back into the ways that you can update your financial plan for the new year's. The next thing that you want to consider is your effective or your savings rate. Your savings rate is how much money you saved in your 401k, your IRA, and your personal accounts. The reason that you want to look at that is because when we looked at our effective tax rate, we saw how much money the government's taken out of our pocket. So hopefully you're putting in a similar amount into your own pocket. You're keeping as much as possible for yourself. I watched a video the other day by Grant Cardone, and he had a nice little formula that he uses. He says 40% goes to taxes, 40% goes to savings, and the remaining 20% is what he and his family live on. Now, they have a lot more money than the average person, but I thought that rule of thumb was good, and that you want to at least match the amount that is going to the government in your own savings. So you can do that by looking at your 401k, your IRA, your personal savings account, your health savings account, and just totaling up how much did you contribute to those accounts, how much did you save, and what amount of your total income last year does that represent, right? So it's just like your effective tax rate, where you're going to take the total of your taxes and then divide it by your gross annual income. But in order to find your effective savings rate, we're going to take the sum of all your savings and divide it by your gross annual income. And by doing so, you might notice that you're saving, you're saving enough, or you're not saving enough. And you might find that just by looking at that number, it might motivate you to save a little bit more. If you're looking to save a little bit more for retirement, then the first place that you want to start is with your 401k plan at your employer. Now, if you don't have a 401k plan, then there may be some other options for you. But your 401k plan can be a great tool to allow you to put away some money on a tax-deferred basis, and that can be very helpful for you. When you're looking at your savings options, you can put money into a tax-deferred account, meaning I want to defer the taxes into the future, where I'll get a tax break today, and I'll worry about the tax rate in the future when I take the money out of my account. But now with the federal debt being as high as it is, about $21 trillion, the U.S. government having no fiscal responsibility whatsoever by running $1 trillion deficit, things like the Secure Act that are being passed by Congress that are requiring for you to take distributions out of inherited IRA within a 10-year window, you can see that the government is going to have some issues with paying off debt. And in order to kind of make ends meet, I wouldn't be surprised if tax rates increase in the future. And so you want to have a mix of tax deferred and taxable accounts. Because if you're putting all of your money into a tax deferred account like a 401k, if tax rates are higher in the future, let's say that the highest marginal rate goes up to 90%, like it was in 1961, then you're going to be in a difficult situation when it comes time to take money out of that portfolio. So you want to have a good mix of tax-deferred savings and then savings that are in a taxable account, or even tax-free if you're using vehicles like a Roth IRA. So the second thing that you want to do to update your financial plan is to look at how much you're saving and where that money is being saved. Now, the third way to update your financial plan for the new year is to review your debt payments. And your debt payments are going to consist of payments to your credit cards, your mortgage, your student loans, auto loans, whatever the case may be. And the easiest way to look at this is just get the year-end statement and just look at the total amount of total amount that was paid, and then also look at the total amount of interest that was paid. For me personally, that was pretty motivating. I took that opportunity to go ahead and consolidate some credit card debt, and in order to lower the interest rate there, because I just found out that there was just a better opportunity for me. And as a result of that, I was able to improve my credit score and also lower my monthly payment. More importantly, I got off of this hamster wheel of having to constantly, pay off the credit card debt. Basically, what I did was rolled it over into a personal loan. It was a lot lower rate, and it gave me a fixed term of a couple years, of 3 years. So that can be very beneficial for you. You might find that you can lower your payments. You can maybe keep the same payment, but pay the debt off faster because you're paying a lower interest rate. There's a lot of opportunities for you there to save some, to pay down that debt. And most people, they're one of the biggest areas of stress in their life is their finances, and oftentimes it's due to debt. So if you can manage that debt well, then chances are that you're going to have a lot of ancillary benefits that'll help you out. So if you found this helpful, let me know. Leave me a thumbs up. Smash that like button down there. Give me a comment. Let me know what questions that you have. And if you are interested in learning more about your retirement plan, about building a strong retirement plan, then don't miss the training that you can register for free at GarciaSecurac.com. So you can get in touch with me at any point if you'd like help with your personal situation, you have some questions. You can call me there. That's my office line, or you can reach me on social media, and it's pretty easy to do so. So thanks a lot for watching, and I'll see you in the next video. Take care.